Welcome to the Genghis Weekly Investor Briefing. On this briefing, we usually give you the key things that have happened in the past week in matters equities and the fixed income section of the finance industry. And this week, we have a guest speaker, that is, he's called Mathew Kabeere, who comes from FXPesa, that is by EGM Securities, and he's going to take us through more about how to trade in the global markets. And but to start us today, we'll start with Gerald Morioki, who will take us through the fixed income and the equity section in the absence of our research head, that is Churchill Ogutu. So should you have any questions, please feel free to either raise your hand or to use the chat section or the Q&A section. Your questions will be answered at the end of the presentation. So over to you, Gerald.
Thank you, Daniel, and good morning, everyone. Let me share my screen. So we'll begin with what happened in the markets last week. As you can see, markets are barely moving. I think NASI was down about 0.3%, and then SE20 was about 1.4%. Basically, very marginal movements over the recent, I think, almost 3 weeks. So it's a market that is showing uncertainty in terms of direction. I think in market terms, we usually call it a deer market, like deer, like antelope or gazelle. You know, a market that is not trending, a market that is not showing signs, showing breakout signs, whether on the upside or on the downside. So it tends to be a bit frustrating for most traders and investors because position taking usually informed by the trends in the market. So given our market is a bit is not trending, is a bit stuck with very marginal movements week on week, it's tend to be a bit difficult to take short time positions. So turnover was up about 11% to 1.3 billion. So this is still very low levels. I think on average we usually do on average on the usual cases we usually do about 3 billion shillings. So as much as the turnover was up 11%, still quite low compared to the weekly average levels. Foreign activity participation went above 70%. Last week, the previous week we had about 69%, but this is increased to about 72%. And the foreigners are still exiting the market. So last week was about 200 million. Then the previous week was about 434 million. So profit taking mostly last week compared to the other weeks. The other weeks, usually one or two stocks where foreign investors were buying, but last week was mainly profit taking. So they were selling out of Safaricom, selling out of KCB, selling out of equity, Centum, and BAT. The top traded stocks last week are the usual big cap stocks. So the Safaricom, the equity, and the BAT. So we still, generally for the market, we still expect this uncertainty to continue, at least in the short term, because again, when you do look at the macro side, there's growing concerns about the risks that the second wave of the pandemic is going to impact the economy. So I think that uncertainty is going to be reflected in the market over the coming weeks until we have a clear direction in terms of how the pandemic will pan out. So where we are trading at compared to African peers, well, if you look at the weekly performance, that is column number 3, the markets were very, I would say, bearish. Sentiment was quite bearish last week across most of the markets in in sub-Saharan Africa. Most negative is just the positive performance in Nigeria. But when you look at the market trading multiples, I was trading at very attractive levels, 9.3 times, compared to the African peer of about 13.2 times. Then our dividend yield is also above the African peer average of about 5%. So these are good multiples, and I think when a sentiment changes, especially from the foreign side, then activity on the Kenyan market is going to be quite high compared to the African SSC markets. So trading ideas for this week on a long-term basis, we still encourage investors to take to look at the strong stocks with very strong fundamentals. I think this will be outperformance in the long term, as we look at look at the uncertainty that is currently in the current environment. So long term, there's opportunities almost on all the large cap counters. But our key recommendation this week is at Kengen. I think where it is trading at recently at a price of about 5 shillings. It has come off over last week, and we think this is a good level for investors to start gaining entry position. And when you look at its fundamentals, I think one of the key things that has been key for us is how the business has been investing heavily in its fundamentals, in growing the business. I think we are happy about the revenue growth initiatives they have been undertaking, basically capacity additions. Last year we had All Carrier 5. By the end of this year, it will be 1 year in operation. And that had quite the impact in terms of revenue contribution as per the latest financial results. And then in terms of revenue diversification, not just investing heavily in the core business, which is electricity diversification, they have been focusing a lot on other revenue channels. I think they've signed some large contracts with Ethiopia and the Ethiopian government and some Ethiopian companies that are doing geothermal drilling. I think the last I saw was about 13 billion shillings in terms of contracts that they signed. This is something that they are very keen to continue because even at its current base in All Carrier, they're also looking at other ways where they could get some revenue, and not just from electricity generation. So that is one of the key things that is stand out for us, and the other is basically how the stock is when you consider that it is a government entity. It doesn't trade as other. It doesn't, in terms of performance, in terms of corporate governance and management, it tends to be an outperformer compared to the other government entities that are listed. So that is one key thing that we usually tend to look at keenly. But so far, I think the corporate governance and management has been strong, and there isn't anything that investors can worry about. So, but the key risk for Kengen is of course its model, single buyer model, and we all know that the current buyer is having some challenges, and this basically usually impacts the business, Kengen's business in terms of cash flow. So it will tend to have some cash flow challenges here and there depending on how the buyer performs. So on the other end, last week we saw an announcement by Nairobi Business Ventures. It popularly trades under the K-Shoe brand. So they came in with an announcement that they're bringing in an investor to pump in additional capital, but this is expected to dilute the current shareholders to about 16%. So effectively, a dilution or about 84% to current shareholders. So our case for this is investors should it ties in with the long-term recommendation of stocks that are strong, because these don't tend to have surprises. Speculative stocks can always give you a surprise, especially when you are taking a position. So when you look at the dilution of the current shareholders, with the bringing in of the large shareholder, then this is a surprise event for shareholders and other investors, because when you look at also what they announced, that they are going to change their business strategy. So from selling shoes and other leather products to dealing with cement and cement products, which is a market that I think is a bit overcrowded. Production is almost above what the market can absorb. So I'm a bit skeptical in terms of their strategy and their strength in that market that they are looking to venture into. So speculative stocks for us, or the penny stocks for us, we tend to encourage investors to keep away from and look at the strong stocks that have good fundamentals. For the corporate calendar still remains. I think the key is the upcoming books closure this week for Kengen. Investors should definitely look at that. And on the macro side, quite some activity last week. Yes, the much delayed GDP numbers, second quarter GDP numbers, the print came in at negative 5.7%. This is expected. I think a contraction in this period, that is second quarter, April to June period, was quite severe. Activity almost stopped across the board. But the biggest impact was on the services segment, which declined by about 11.7%. So, however, when you look at the third quarter, that is the September quarter, activity had picked up. A lot of the containment measures had been relaxed, and I think that is going to be a better performer quarter compared to the second quarter. However, for the fourth and last quarter, starting this month to December, there are emerging risks in terms of the virus. I think now we are seeing positivity rates of above 10%, levels of new infections quite high. So this increases the risk that the president may consider some of the restrictions that were initially there, and this could negatively impact the performance of the economy in this quarter. However, there's news. There's always that hint that a vaccine is on the horizon, but this is expected to take a bit longer from the initial expectation of fourth quarter. But I think a vaccine would be coming in from start of next year. So fixed income market quite depressed. Activity fell about 22.9% week on week to 12.4 billion. I think the most focus was mostly on the primary. You can remember there were 2 bonds last week on the primary market. Then if you look at activity, where activity was most focused on was on the 5-year papers. So we observed a lot of investors coming in to shorten their duration, given the rising risk of new infection, and also macro risks that are there if the trend of new infections is going to persist. So treasury bills performance for the second week quite good, on 32%. and the market was quite liquid. I think this was the key towards that that performance in the T-bills segment. For our fixed income recommendation trade, I think we are looking at the bond that was in the primary last week, the reopening last week. This is 20 FXD1 2018-25. 2018-25 years, we are recommending a sell at 13.10-20 levels, since we expect an upward repricing on this paper as it enters secondary trading either from today, but mostly from Wednesday, given that tomorrow is a public holiday. The bond, you'd note that the bond was priced at a slight discount. I think the average yield was about 13.49%. With a coupon of about 13.4%. So we expect that the pricing for this bond will revert to those pre-auction levels. So that marks the end of my presentation. We can go to Mathew on the next segment. Thank you.
All right, thank you so much, Gerard. To our listeners and the investors here, welcome to this training briefing. So today, on my end, because it's the first time that we're doing this, I'm just going to take you through the opportunity that you have in the global markets, and especially with us, the EGM securities and on the FXPesa product. Just a second, and we'll be up and running. All right. So hope everyone can see my screen. Can you see my screen, Gerard?
Yes, we can.
Yes.
All right. So right straight in, just want to look at what is Forex. Is simply an acronym of foreign exchange. It's a component of the financial markets. And I'm sure most of us who are here are already in the financial markets because you're participating in trading with equities, you're doing bonds. I don't know about currencies, but this is what we're going to speak more about. Forex is one of the largest financial markets. It's traded over the counter, which means as opposed to here in Kenya, where you might need to go to the floor of NSE or have someone at NSE to trade for you. Here you're doing it on an electronic platform like a laptop or your phone, so long as you can connect to the internet. It is based on speculation, which means that you try to analyze the markets and see the next move that the markets might be taking. So what opportunity do you have, and what characteristics of the Forex brings you the opportunity? We have very high liquidity in the market, up to 5 trillion exchange hands. When you just look at, take a summation of all the trading which has been going on through the 24 hours in a day, you find that might be up to 5 trillion. That is the volume as at 2015, as at 2006. Is it 2006? It's around there. And currently it might be up to 6 trillion. This market is decentralized. There's no specific location. So long as you can access it on your phone, you can trade. It's an operation that goes on for 24 hours a day. So throughout the week, you can trade except the weekends. And we've had about on the other side of stocks, you're dealing with fundamentals. And again, even Forex is affected by the economic issues, macroeconomic issues, political things, and technical aspects, especially on the volumes and the movement of prices. So Forex also you might want to trade because there is leverage. It means that you can start with a low capital, and of course there is a minimum charge that is called the spread. These are things that you can grasp more once you get the training, and there is a flexibility for you to trade Forex. So what makes it different with trading stocks, that is investing versus trading? When you're doing stock trading or investing on this other side, you're buying and holding for a long term. Whereas on the other side, when you're trading Forex, you just make short-term entries, frequent. Maybe you might open trades 2, 3, and you're closing them in a day. So when you're trading on the stocks, remember you're owning a portion. For example, if you buy stocks for a given company, we were talking about Kengen and others. So if you buy on those stocks, for example, when you're trading locally, you'll be owning a portion of that. But on the other side of Forex trading, you're just looking at short-term returns, maybe 15 minutes, 1 hour, something like that, 3 hours, or even days, and you can close your positions with your returns. On the stock side, for example, when you buy stocks for a given company here in Kenya, you don't really look at the short-term price fluctuations. Yeah, you're just looking at the end of it all. And that's what the other side of Genghis is talking about. But when it comes to Forex trading, it's just very sensitive to price changes. You have your eyes on the movement of the prices and how they are making their patterns, whether going up, what are the volumes. And we've heard about my colleague speaker talking about the financials, the partnerships, strategic partnerships, the management, the company strategy. And that's what you will consider most when you're trading the stocks. But on the other side, when you're trading Forex, you're more concerned on the volumes being traded. How are the markets moving? What is the supply and demand of a given currency, and the price patterns? So maybe just to put a small line of separation between this investing on stocks and doing the online Forex trading is that on the stocks, you rely more on the fundamentals. That is, you want to look at the management, you want to look at the financials, you want to look at key partnerships and those kind of things. And you're looking at it on a long-term kind of a thing, maybe 6 months, something like that. But on the Forex trading, just to sum it up, in as much as you look at the fundamentals of a given, if you're trading with a stock of Google, you want to consider fundamentals as well, but your eyes will be more on the movement of the prices and the volumes, and sometimes even look at the earnings, but mostly you're just concerned with the price movements in Forex trading. So when you're trading Forex, you have to do it through a broker. And in this case, now, what is the role of EGM Securities as your broker? Number one role is just make sure that once you want to buy or sell, then you can execute your orders with very low latency or no latency at all. And again, make sure that you connect you to the Forex interbank market. Those are the providers of the prices of those quotes. And we just make sure we pick the best for you so that you can enjoy low spreads. That's our role, number one. And then again, make sure that you are protected as a trader, right? We are compliant to the Capital Markets Authority as a non-dealing broker. We are compliant of all the requirements, and that's why we are non-dealing. Another thing is we provide you the FXPesa platform to make sure that you can access all those superior trading features, get a great experience. We even have an analysis research terminal, of course, based on the Dow Jones News and Economic Calendar, just to make sure that you can tap on real-time insights into the market to make your trading even more smooth. We have best-in-class trading products that you can use there, over 180 products to select on. There's a leverage of up to 400. That's what makes sure that it helps you open positions with a minimal capital requirement. Okay, and then we have support all along. For example, we train our clients for free. We have dedicated support. We have workshops for free and account managers that reach for you, and even sending you frequent market research insights just to make sure that you can trade successfully. So those are our main role as the broker. That's where we come in. And then what can you trade with FXPesa? We have Forex assets there, over 100 currency pairs. You actually basically have to select a few of them. You can't trade with everything. We have indices, and of course, some of the most common that you've heard of there. Of course, you've been in this investment area and you've heard about the NASDAQ, trading on our platform as UT100, S&P 500, US 500, Dow Jones, DAX on the German side. So we have indices from all sides of the global market. You want to tap on the European side. Maybe you might want to go and look at the DAX for the Germany and FTSE for the UK. You want to tap on the American side, look at the S&P 500 or the Dow Jones. Again, we have others even from the Asian side as well. So there's so many. We have commodities. People who are interested with gold. Of course, you know, sometimes when the markets are not doing good, people want to hedge things about inflation and go to safe haven like gold, something that you might want to consider as well. Others like silver, platinum, again, oil, we have all those. And then stocks, of course, we have stock product, but now we don't have the local products here, but it's the global stocks, things like Facebook, Boeing, Netflix. And these are things that you can trade just the same way that you are trading with the equities here in Kenya. So how do you start trading Forex with FXPesa? The step number one you take is just join and go through the free training that we have. SMS the word join to 40184, and you have options to sign up to our workshops and or join the Telegram channel. That's where you get news and a lot of information. Once you do that, we have the account manager side and people who are committed to make sure that we get exclusive experience. They will just get in touch with you. Once you register through our platform, get the free training. Of course, you will be required to register a demo account to practice with it. It's kind of a simulation where you see the live trading environment, how it works. But of course, you're practicing with virtual money first before you start trading with your real money. You want to make sure that you feel comfortable on your strategy first, and you understand your style of trading. Once you register a demo account and you practice for some time, then the next thing for you is to register for a real account. And then with a real account, of course, you use, because it's a live account, a real account requires you to provide proof of address. And in less than 10 minutes, you have your account approved, up and running. Once you have your account, then it's, and you feel that you're comfortable trading. Yeah, you've learned the strategies, you've learned the tricks. The next thing is now to deposit. And again, another thing that's very good for you is that you can deposit via more than 5 methods with FXPesa. You can use your M-Pesa, Airtel Money, bank card, bank transfer, so many ways just to make it smooth for you. So how do you make money? You speculate. Remember, we said that it's based on speculation. You speculate on the price movement of a given financial instrument. So you make a profit if the value of an asset changes as you anticipate and as you've placed your order. So if you can just see on my screen there, when you're expecting a given asset to fall or depreciate in price, remember we are concentrating more on price here, right? Whether it's a stock, whether it's a currency, whether it's a commodity like gold, you just want to know and whether the price of that asset will be falling. And if you think the value will fall, then you go short or you sell. And then of course, remember we say that you need to have a predetermined steps, a predetermined plan where you want to buy, where you want to take your profits, and where you'll be closing your losses in case it doesn't go your way. So that case there, if you're expecting the value of a given asset to rise or appreciate, you go and take a long position. And of course, you have your target. So things that you should note quick fast is that speculation is based on analysis of the market, and you're using the fundamental and technical analysis methods. So it's not just like guessing out of the blues, right? That one removes the aspect of the gambling issue, because so many people think that they Forex might be gambling, but no, it is a speculation based on analysis of the market using the fundamentals that of course are there and the technical analysis methods. We have so many tools for you. We even have a research terminal. We'll be speaking about that one in a few. Another thing to note is that you don't make or lose money by just having money in a live account. So you don't have to fear that when you deposit your money, you're losing it. No, you have to open a position for you to, you have to take a position for you to start making money or losing it. But of course, you want to get education so that you know the best times to buy or sell in the market. So again, very important, you invest on education, especially on Forex trading, because you want to do something that you really understand what you're doing. That's what you remove the aspect of feeling is too much risk or feeling there is that element of gambling. So let me speak a little bit about our training program. Even if you've not been doing this and it's very new to you, remember on our side, we won't be trading for you, all right? We don't have an like a market fund. We would be offering those kind of things. On the side of Genghis, you're doing on the Jikuze, you have the money market fund, you have the pension products. On our side, remember, we want you to understand how to trade, and then you trade for yourself. And for us to enable you to do that, we take you through a training, and it is for free. We offer it online. And this is just a breakdown. When you're very, very fresh, we take you to the beginner's level, the introduction to Forex, terms in Forex, instruments, the platforms, executing basic commands. Just we hold your hand to make sure that you get the very basics. Then you move to intermediate level, the price action and technical analysis. Remember, I said that we really concerned about the price movements and the volumes in Forex trading. Not very much on fundamentals, but we don't ignore them as well. But again, price action or the movement of the price is very important. So we teach you on how you use various tools to analyze the price patterns on those platforms. Of course, we want to make sure that you can get the optimal trade opportunities. Once you're done with that, go to an advanced level where you look at the fundamental analysis. Yeah, of course, this is something not very new to you. Now you want to look at what are the economic or the macroeconomic events happening around a given asset. For example, if it is oil, what news are happening? Do we have OPEC cutting supply? Do we have them increasing supply? For example, when you go to the US, do we have elections? Those kind of things. How are the politics? How are the social events? Sometimes we had a movement like the LGBTQ, those kind of things, how they affect trading. That's where you learn how to integrate them on the advanced level, and how you can form a strategy and how you can manage risk. Once you're done with that, trading actually takes like a week, but it's not like you've completed everything in a week. You keep on learning and practicing in Forex to understand everything. Once you're done with that level and you have your account, because up advanced level, you have the ability to trade on your account, right? So once you're done with that, then we have kind of a mentorship program. You can always come back to us, ask questions. And to even support you more, we can we do webinars again on trading strategies that you can, how you can get hold of your trading strategies and help you get hold of your trading psychology as well. Because again, Forex trading, most of the time we say it's like 70% the mindset and the psychology that you have. You need to be stable in your psychology, believe in yourself, those kind of things. And of course, but you need also the other 30%, maybe 20% based on your skills. And then of course, the support that you're getting. So that's how we run through our training program. Something very important I want us to look at. So apart from the trading where you're doing it yourself on the platforms, what other avenues do you have to earn with FXPesa? We have a partnership or introducing broker plan. That is where you earn rebates by introducing clients. Then for the established traders who have already been trading, of course, you've been in this field, you might be trading out and there, and you want to start your own brokerage or something like that, but you need support, then you can, something like white label is something that you can also consider entering in. You have the refer a friend program. That's those clients that you feel that you have strong networks and you can leverage on that again as you're trading to have more people join, then something that you can consider as well. Then we have the competition for traders, for people, just to keep you motivated. And of course, you get attractive prices, even up to $1,000, and it's considering it's within a period of like 1 month or even 2 weeks, not something bad for you. So like for example, last month, September, we had the IB of the month competition, and so many more will keep on coming. Lastly, just want to encourage anyone who wants to do the Forex trading, because we are coming in just to give you something that you can at least diversify with, even as you're doing your trading with Genghis. You can try and see that in addition to your portfolio there that you're doing on your stocks, maybe you can, and as you're holding long on your position there, maybe you can consider the Forex trading as a way that you can take advantage of the global markets and get earnings within a short term, because again, you see you can get short-term returns within a very short time. And maybe to start off, just the right mindset, get the right education first. We'll give you it to you for free, yeah. And again, don't take Forex trading because you can see very fast moves, not a get-rich-quick scheme. You give yourself time to grow, just like you would start a business and give it some time to grow. You don't start a business today and then you started cashing the next week. You give it some time, maybe even support it for quite some time. So you need to allow yourself some time to grow. And that one removes the mindset of like get rich quick kind of a thing. Again, it's not gambling because you know what you're doing. You're trading with a plan. And that's why you need to invest in education to understand how should I trade with a plan. And I can give a very fast example here, though I don't know, we don't have a lot of time. If, for example, you have $1,000 invested in your account, for example, you just need to get your plan. How do you want to grow that money? How much do I want to earn in a month's time out of that capital? And in a month's time, remember, we have 4 weeks of trading. How much do I want to earn again within those 4 weeks? You break it down in such a way that it goes in line with there's one rule that we say, don't risk more than 2% of your trading amount, those kind of things. So you trade with a plan and you realize it's something that is really based on a specific strategy. It's risky, yes, but you have risk management tools at hand. Like, for example, I've said you don't allow yourself to risk more than you can afford to lose, like 2% of your capital, and you have a trading strategy and a way to manage it. So just consider it like any other business, just like the way you're trading stocks on the other side. That's how you consider it, and make sure you nurture. And up to that point, in case you have any questions, because this is the first time that we are getting into this briefing, I'm sure next time we might be getting more into looking into the markets. But just to mention a few, last week on the markets, on the global markets, of course, you know, US is a big boy when you're talking about the Forex trading. And we had the US Treasury Secretary Steve Mnuchin, of course, playing down the chances of having the stimulus pre-election. That is something which is affecting the supply of the US dollars. And of course, that one made the global stocks to plummet a little. And of course, as the dollar was strengthening, of course, last week, of course, we saw the coronavirus case is going up, and that one is affecting the European markets as well. And then on the UK side, we see there is Brexit. So this week we are looking up for the meetings in Australia on their the minutes. And then of course we have earnings. So many companies doing their earnings announcements. Yeah. the UK inflation, those kind of things. So maybe for the people who are trading, maybe to give you some insights, you might want to watch on the pound USD, of course, because of the news and of course the events happening in UK with Prime Minister Boris Johnson pushing with the European Union to try and see how they might want to get out of those kind of things, or if with a deal or not deal, those kind of things. So you might want to watch on the pound USD. NASDAQ, of course, trading on our platform as UT100 for the ones who are already doing it. We have the third quarter earnings coming up, of course, and the US elections and the stimulus, which is on the offing. That one is still going to affect the movements with the NASDAQ. So again, earnings sessions, of course, you know, when the earnings are announced, they affect the supply and demand of the currencies. Of course, the elections coming up, and of course, the Brexit. Those are the things that I can just mention very fast, and just to wrap up on my side. But in case you have any questions, you can just reach us on those numbers there. You can contact us through the support@fxpesa.com, live chatters, and we will be with you. And I think I will take it over to my colleagues.
Thank you very much, Mathew. Thank you for that presentation. I think you have covered huge ground on matters Forex, and we'd like to tell or rather inform all our attendees that Genghis clients, as a Genghis client, you can have access to the FXPesa platform. That is, if you're a CDS client, and it's something. If it's something that you are interested in, you can actually speak to us via chat right now, or via our email address, that is info@genghiscapital.com, so that you can genghis-capital.com, so that you can take you through the registration first as a CDS, and then give you access to the platform. So as the presentation was going on, we received a couple of questions. So maybe I'll start with the first one. Terry Waruiru is asking, where and how will you advise a young person to start investing, for instance, unit trust, equities, and get high returns in the process? So maybe Gerald, you can tackle this.
Thank you, Daniel, and thank you, Terry, for your question. For a young person, I think young people tend to be more risk aggressive, you know, given that they have a little bit of some time whereby they can try out different things, they can try out different strategies, and you know, and see how it works. So for a young person, I think one of the key things they can look at is definitely equities, and also the alternative investments that EGM Securities offers, such as Forex trading and the like. I think they can start off with those two categories of investments. This tends to be a bit volatile. They tend to be a bit more, we could say, more risky compared to the other traditional investments. But the potential for return from these securities is again usually much higher compared to what you'd consider safe assets, such as unit trusts, such as bonds, and other investments. But I think the key, as young investors look at these securities, the key is also to do a bit of some diversification, right? The most important point of diversification is how you allocate, you know, in terms of the risk or the asset classes. So do a diversification, take a bit of some risk. A huge portion of your portfolio should go towards the assets that are more volatile, and also have a bit of unit trust and also some bonds. I think with that balanced portfolio, you could definitely have a good point to start you off, and also to continue as you increase your portfolio size. Thank you, Daniel.
Thank you very much, Gerald. The second question is also geared by Richard Mwangi. That is, what are 5 top stock recommendations by Genghis? Gerald, over to you.
Thank you. Good question again. Our top stocks are definitely the stocks with the biggest, with the strongest fundamentals in the market. Currently, I think the banks are trading at very good levels. We have KCB, Equity, and Cooperative Bank. These are the large tier banks. They usually have the highest return on equity. They usually give some of the best dividends you can have in the market. And then to diversify away from the financials, consider EBL. I think it's trading at very good levels, 160 shillings. Kengen also as a diversification point from the financials and other sectors. And then Safaricom. I think Safaricom, if you could get Safaricom at a price of 28 and below, I think that is a good entry point. Recently, it's trading at 30 shillings and it has been stuck there for some time. But I think there's immense value if you could get it at 28 and below. Thank you.
Wesley Chirchir is also asking, what advice can you give to an investor who wish to get a monthly income from trading? Gerald?
Sorry, you're mute.
You're on mute, Gerald.
Yeah, sorry. So unless that investor structures in a way that considers the portfolio, in a way that considers the securities that are high income. In the stock market, there's usually that volatility, and it is a bit hard to structure a portfolio where you have a monthly income. But if you consider other assets away from the equities market, I think the unit trust usually they do daily compounding, and then the interest is credited on a monthly basis. I think that could give you and also fit your investment purposes. That would be ideal for you, the unit trust, as a tool for monthly income.
Okay, thank you very much. Mathew, a question for you. Milka Kangari was asking, what is a non-dealing broker, and is there a dealing broker?
A good question, Milka. Yes, a non-dealing broker is a broker that does not deal on your money. Like we don't touch your money. What we do at EGM Securities, of course, with the regulation by the Capital Markets Authority, one requirement is that we don't touch on the client's money. All right. So it means that once you deposit your money into your trading account, your money is held on a segregated account, different from the company money, which means that once you need your money, you can get it, access it anytime. So in the event that maybe something happens with the company and they're no longer working here, then you can have your money in a different account and you can claim it. So a non-dealing broker is a broker that won't do any operations of buying or selling, would be touching your money to place a buy trade or a sell trade. And what we offer on our side is just advice. So we are a non-dealing broker in that respect. And a dealing broker is maybe the ones that trade with your money. For example, we have the ones that offer MAM accounts and PAM accounts. Those are multi-asset management. And those others also, which are based on percentage allocation, module management. Those are the dealing brokers. Again, that's the difference. So for a non-dealing broker, we don't touch on your money. It's you who trade on your money. We just hold your money in safe custody to make sure that you can access it anytime you want to trade with it, you want to withdraw, you want to deposit. It's very easy. We don't touch on it. Just make sure it's on safe custody. That's a non-dealing broker. For a dealing broker, they have they can maybe trading for you or that kind of a things.
Okay, thank you very much. Newton is actually saying, always a pleasure to honor to attend this. For Forex commodity trading, especially gold and oil, what happens in the case someone tries to hold them until market prices or exchange rates look favorable?
All right, good question there. Wherever you're trading on Forex, remember you choose on the type of trader you want to be. You can be a scalper. A scalper is someone who will be opening positions within very few seconds or even minutes, but not more than that. You can be a day trader. You can hold your positions between hours and maybe a day. You don't have your positions going beyond midnight. That's 24 hours. You can have someone who is swing trading between days, and I think that's where is it Robert? Yeah, that's where the client is asking about. And then you have someone else who will be holding the positions for months. So if you trade on anything, remember they are on rolling basis. If you hold a position on an asset, for example, and it goes beyond midnight, then you are charged a swap. And of course, a swap can be positive on your side. You can be paid or you will pay, depending on which product did you buy or which product you've bought and whether you've held overnight. So you're charged a swap, but yes, of course, you can hold your position. If you're a swing trader, hold your position up until your target is reached. But of course, when you're doing that, make sure that you're holding your position based on a target, so that you did just go inside there and buy, and then you wait for the time when the price will go high. That's not the way. You need, if you be holding your positions, you have to be holding because you're waiting for a given target. And what will happen if it just rolls over those between days, then of course there will be a swap. And depending on whether it's you're holding a high interest bearing asset, then of course, if you're holding a high interest bearing asset, it means that you would be paid. If you're holding or you're buying a low interest bearing asset, then you're the one who will be paid. So that's how it goes.
Thank you very much, Mathew. Gerald, there's one question for you. What is the outlook in insurance stocks as well as banks?
Thank you. For insurance, I think the sector, I look at it in terms of growth, both sectors. If you notice that both sectors are financials, you can categorize them as financial services. But when you look at growth in the insurance sector, it has basically been flat over the recent years. But when you look at the banking sector, the growth has been quite good, one of the best in the stock market. So for insurance, I tend to be a bit cautious because the growth has basically been non-existent. I think from the recent statistics from the Insurance Regulatory Authority, they're talking about a decline in penetration rates. We are at about 2.3% compared to about 2.4% in 2018. So it is a sector whose growth prospects are quite low. But on the other hand, when you look at the banking sector, the growth has been quite good. I think they have been giving some of the biggest earnings. They have been some of the biggest earnings growth stocks at the Nairobi Securities Exchange. So on a longer term perspective and on an investment perspective, I think the prospects in the banking stocks is quite good compared to the insurance industry. Definitely, this year is going to be an outlier. Performance is not going to be good this year. I think from what we observed in half year, I think there was a lot of provisioning levels. There was decline in asset quality. So performance, of course, is not going to be stellar this year. But going forward on a long-term basis, I think performance will recover, and we'll be back to where banks have been in terms of earnings performance in the next few years. But insurance, I think it's going to be a bit of a slow sector for the foreseeable future. Thank you.
Thank you very much, Jal. One more question for Mathew from Lois Oduor. Mm-hmm. What are the market trading times for FX trading? And does anyone need to be glued to the computer the whole day if you're day or swing trading? That is asking for those.
Yeah, good question, Lois. It depends with your trading style. Remember you said that the market is open 24 hours every day for 5 days, except for the weekends. So again, remember I said we have scalpers, we have day traders, we have swing traders, and even the ones that will hold for even months. So whether you want to keep watching on those charts for hours and keep glued there, again, depends with someone whether you want to be getting in within a very short time, look at the markets and then get out again. Again, it depends. Because there are people who are doing Forex trading one as the main thing. They don't have any other job. So their work is just to trade Forex. And we have guys who are doing that. So many of them actually. And also we have people who are taking advantage of the Forex trading as well as they do their day job. So you've gone, you at work, and then you take maybe, for example, in the morning, a few minutes to set up your trades and look at them, or maybe place a trade and look at them. And then maybe you keep on checking on intervals after maybe tea break. You want to look at your trades and see how far they are, whether you're reaching your targets or you're waiting for a setup. So again, it depends with the style of trading that you want. Forex is very flexible. You get to learn yourself, you understand the level of risk that you can take and the best times for you to trade. But notable, the market is open 24 hours every day, because we have the session opening up on the Australian side, of course. Then we go to the Japanese market, then you go to the UK market, then we end with the US sessions. So market is open all along. But maybe to give you an insight, UK exists, the UK session, the London session exists between the Asian side and the American side. So it's just in between, right? So you might want to consider trading on that time. There's higher volatility. Also, the US market is very big on the New York Stock Exchange, and New York session is very, very big. You might also want to tap on that. But again, when we have those markets overlapping, especially when of course the UK session opens around 10 a.m. in the morning, goes all along, and then the US market opens at 3 p.m. So all along between that time when the US market opens and it's overlapping with the UK market, we have very high volatility because the market is open in 2 sessions. So you might want to consider those sessions. But again, on which times are best, that one is something that you need to maybe try to tailor make it, whether you're trading it as whether you're doing Forex trading as your only thing, or whether you're doing it again along with your day work. Yeah, over to you.
Thank you very much. I think I'd let my colleague Damaris go through some of the questions that have already been covered on the chat section. Damaris?
All right, thank you so much, Daniel and Gerald and Matthew. Matthew, it's really great that you're able to join our session. We've had a lot of clients asking about what other financial products we offer. So this first session, I hope, is just the beginning. We'd love to get you back just to now actually hear about the financial markets.
It will be my pleasure.
That's awesome. Because I think the question we're seeing from people who are interested in trading and how they can make a monthly income, and those people who are displaying an interest in unit trust and equities and FX trading, I think what we always need to remember is portfolio diversification. You don't want to put all your eggs in one basket, but also you need to arm yourself with the necessary information. So if I just quickly go through the Q&A, Mark Bunyi, thank you so much for pointing out the fact that the Nairobi Business Venture counter is missing on the app. So our IT team is already looking into it. So I probably give it a few more hours and then check back again, and that counter should be available for trading. Teresia, I think your questions were answered about the free online trading for beginners and how can you start trading online. So we definitely send an email to all attendees at the end of these sessions. We'll include the link to their course-sponsored training. That's thanks to the Genghis Capital and EGM partnership. So you'll be able to register. And I believe, if I'm not wrong, Matthew, it's a progressive training that starts from beginner to intermediate to expert training. So So that's great. So you'll be able to do that. Jedediah Kasiva, you had a concern about monies you're depositing. Again, I assume this was through the Jacuzzi app. As I've indicated, we will reach out to you because we have your email address. We'll reach out to you and just guide you accordingly. Because when you log on to the app, you have two different investment paths that you can follow. That is for equities. And then for equities, it has its own unique account funding options. And then for unit trust. So what I think is happening is probably there isn't very clear guidance, but we'll be able to help you out. So thanks for reaching out for help. Then I have Nyoni, who had asked about the stock brokerage fees. So as I've indicated on the chat, you only get charged the stock brokerage fees when you trade. That's when you buy and sell shares. So on months where you don't do any activities, maybe you're just now in it for the long-term returns, you don't incur any costs. And then Ezekiel had asked about if we have, I think, AI or robots for training. So we do not incorporate that at the moment. And you're asking, does the platform allow for social trading where one can automatically follow a guru's move as he or she lands the ropes? So Ezekiel, this is not a feature that's incorporated on Jacuzzi, but what we do have is something that Gerald has mentioned in the past. We have things called income portfolios and momentum portfolios, right, Gerald? So what happens is at the beginning of the year, we structure the ideal portfolio for a specific type of investor. And if you would like to model your investment per that particular portfolio, then you can reach out to us. I believe, Gerald, if I'm not tooting our own horn, I think it was our momentum portfolio, it outperformed several benchmarks and had a very significant return when it came to 2019. But yeah. So that's something we could definitely look at. Teresia, we are here for you. So if you really do want to continue this conversation, please reach out to us. The email address is typed in the chat, info@genghis-capital.com. We'll definitely have a financial advisor reach out to you and walk you through investing. It's always encouraging to see young people who are interested in investing because it's something that's greatly overlooked, but we are hoping that this is changing with time. Faith, I believe your concern, your very significant concern has been noted by Daniel. So we'll definitely, we'll actually find your email address from your registration and reach out to you and see what has been the cause of the delay. I think that's about it. I see here Morris has asked, how much is the stock brokerage fees and what are the stocks in the Genghis income portfolio? So Morris, I know it's a detailed breakdown, the income portfolio. What we can do is share with you the playbook 2020, right, Gerald? We have the playbook 2020 that outlines that. So Maurice Robert, you'll get an email with our playbook, and then it actually shows you the equities which are under the income portfolio. In terms of the stock brokerage fees, if you just give me one moment to refer, I know there is a category for trades which are above 100,000. So for trades above 100,000, the total brokerage fees, which includes statutory levies and fees, is actually 2.35% of the trade value. We can share with you the detailed breakdown because this includes broker commission, the NSC, CMA, CDS. There are a bunch of different levies, but it's 2.35% for above 100,000. And for below 100,000, it's 1.89%. So I hope that has helped you. Beatrice, you bought bonds last year and I'm yet to know what happened. Now, Beatrice, did you buy the bond through us? We'll note this down and talk to the fixed income desk. I hope the email that you use for registration is the same one we can reach out to you on. So Beatrice, we've noted down your concern and we'll definitely reach out to you and give you the answer for that. So thanks for that. Lois, you'd also like to request the playbook. Okay, you know what we're going to do? Thank you so much for requesting. We're just going to include a link to the playbook in our follow-up email so that everybody can have a look at it. Gerald, maybe after I'm done, you can talk about the playbook a bit, because I know it's a dynamic document. And when we created the portfolio, it was at the beginning of this year, and now we're in October, so things have changed. So Gerald will talk about it a bit, but we'll definitely include the link in our follow-up email. So thank you so much, Lois, for the request. Nice. The last question is from Beatrice. You need financial help one-on-one as soon as possible. So Beatrice, we'll get one of our financial advisors to reach out to you and have a healthy conversation. But yes, we'll be able to guide you accordingly. I think I'm going to hand over the session to Daniel. I am sorry for hijacking it, but I just felt like just going through a couple of those questions. Mathew, thanks again. We look forward to having you next week when we get into the juicy stuff.
Thank you so much. I will be more than willing to be part of this conversation.
Awesome. Dan, back to you.
Thank you very much, Damaris, for that brief summary. I would like to tell all our attendees that even as we give you this information, you can be able to action it through our application, that is Jikuze, and with our collaboration with FXPesa, you can also be able to diversify your investments into Forex and share trading. That is from us. And as the week goes by, be on the lookout for the Genghis playbook, the Genghis playbook that will be sent via mail. And I think that other than that, I think that is it for us. Thank you very much.
I'm so sorry. Let me just jump in. I really wanted Gerald to talk about the playbook and its validity so that guys' expectations are managed.
Yeah, sure.
Yeah, sure. So thank you, Damaris. Yeah, so the playbook is an annual, document that usually goes into the detail of our recommendations, of our outlook during the year, and what we expect in terms of returns from the equities market and fixed income markets, what we expect on the macro side. So it tends to incorporate all these asset classes and how we expect them to perform during the year. So it usually released on in January. So we are currently working for the playbook of 2021, and I hope it will be a document to be really looking forward to into the coming year. So maybe I can also talk a little bit about our portfolios. So you'll realize that as much as we have that annual document, there's a lot that tends to change almost on a monthly basis, on a quarterly basis. So we usually tend to give investors an update through the quarterly reports. So we usually have the equity quarterly report, outlook and investment strategy. We have the macro and fixed income quarterly reports. So usually this tends to update the playbook with the most current information and also with the most current recommendations. So for the model portfolio, so we usually have three portfolios. We have the momentum portfolio. Basically, these are usually the most liquid stocks you can have at the stock exchange. They are usually four. We have Safaricom, KCB, Equity, and EABL. And then we have the income portfolio. So these are usually stocks that have the highest dividend yields and are consistent dividend payers. So we usually have stocks like Barclays, ABSA, that is Standard Chartered. At some point we had KCB Group. I think its yield had reached about 10%. So depending on how, again, these stocks move, we usually tend to review them on a quarterly basis. And then we have the value stocks. So these are stocks that usually trade at significant discounts to their value metrics. For example, book value or pricing or earnings multiples. So this we had, I think currently we have stocks like Kengen and Kenya Insurance. So still they usually have, they tend to have very solid fundamentals, but for a reason or another, they tend to be discounted by the market. So again, we usually look at this and review them usually on a quarterly basis. So overall, in terms of performance of our portfolio, the income portfolio and the momentum portfolio, I think currently they're above every other benchmark index that you can have at the Nairobi Securities Exchange. So they have outperformed the NSE All Share Index. They have outperformed the NSE 20 Index and all other indices, including the FTSE NSE Kenya Index Series. So our portfolios tend to be quite their performance in the market generally. Thank you. Back to Daniel.
Thank you very much, Gerald. Towards the end of your this last presentation, presenters or rather attendees could not hear you. Maybe you can just repeat the last part of your presentation.
Sorry about that. From where exactly? I got lost.
I think Susan Jabando was not able to hear you.
Okay.
Yeah, about the playbook.
Portfolios, I think.
Yeah, the portfolios.
Okay. So as I was saying, in terms of the performance of portfolios, they have been above every other index that you can have at the Nairobi Securities Exchange. This include the NSE 20, the NSE All Share Index, the Zamara Index Series, the FTSE NSE indices. So when you combine all those indices together and compare to our own in-house index in terms of the income portfolio and the momentum portfolio, our portfolios have outperformed all those indices. I hope that is clear. Daniel.
Yes, I believe that is now clear.
Okay.
Yeah, so one last question to you, Gerald, was about from Daniel Maingi, who was asking, TPS has been missing from the Jikuze M-Watch for a while. So Daniel, this we will escalate this to our IT department to look at why TPS has been missing. So other than this, I think we can end this webinar here. Be on the lookout also for next week's link so that you can be able to, for those who've not registered, register and join for next week's webinar. Thank you once again, Mathew Kabeere. We hope to see you next week. And your presentation has been, wait, there's a new message. Yeah, your presentation has been really educative in terms of diversification of investments.
All right, thank you so much. And I will be excited again to appear and discuss even more and even delve deeper into now maybe the analysis side on the insights as you're sharing. I believe I just covered just the introduction, because it's when we're starting this, just to let the people know where to start from. And then maybe later we might be going into a little bit more insights into the market. Thank you so much for having me here. And we're really happy to be in this partnership with you.
Okay, thank you very much.
Bye.